We are in the full swing of summer now. I'm sure many of you are keeping very busy and trying to squeeze the best parts of summer out. And just the other day, I heard about the CNE coming into town, which always makes me a little nervous about the end of summer coming towards us. So for now, I hope many of you are doing well, keeping busy, and actually enjoying summer with your families to the best of your ability. We've had some grim news this week, but not something that was unexpected. We had another rate hike, unfortunately. Some of you have been messaging us directly or calling to ask about what this means for you, or looking for scenarios, an option A or an option B, to get your homes ready for market this fall. So here's my best advice to you. These rates, the new rate hike, these are rates that are probably going to be with us for the next couple of years. My best advice to families who are having difficulty with these rate hikes, and we've had so many of them this year, many of you might be finding it difficult to keep up with payments, and I understand that because we've been seeing a lot of families, whether they're single families or dual income families, everybody's feeling the pain of these rate hikes. But the reality is we have to get used to these sticking around, because it seems that the Fed is not going to make a change for at least a couple of years here. So if you're having challenges maintaining your mortgage payments, or you had a HELOC where you had done some renovations around the time of the pandemic, where a lot of families had done, you want to seek help and counsel sooner than later. I know some people are really bullish or really believe that things are going to change and come down in the fall or the spring. I'm not so optimistic about that, and I am actually a conservative or a realist. If you've ever worked with me or sat down with me, you know that I like to plan for the worst case scenario, and when things turn out to be better than that, then I'm really delighted. But the reality is these rates are meant to really curb consumer spending, to really force us into the recession. If you're reading the news and if you're paying attention to what's going on all media channels, you know that they're trying to inflict pain on a lot of people and families to cut the unnecessary spending and to force a recession. So here is my best advice to you if you are a family that is already starting to see some fractures or difficulty in your day-to-day spending. If you've done everything to already cut out unnecessary spending, and there's amazing resources online about how to shop for insurance, how to get the air conditioning and energy costs down in your home. You can cut on grocery spending, but the reality is most of us have a minimum threshold of what we need to run our household and our families, and we're feeling it in the groceries, in the gas, in our mortgage payments, etc. Here's my best advice to you. I've given you this advice before, and I'm going to give it to you once more. If you're feeling the pain and you're starting to fall a little bit underwater every single month, the best time to ask for advice is now. It's not to make it to Christmas. It's not to make it to spring of next year. I'm telling you, as an experienced sales professional and someone who owns investment properties and who has my own obligations, that it's better to seek help when you're just at the green level and starting to feel the pressure or the pain, as opposed to when you're sinking below the waterline. My best advice is, if you have options and can refinance or juggle around, if you have multiple assets and you can take equity from one and refinance to balance things out and you can manage, that's okay. If you own a single home that you've bought, say, let's say in the last 5 years, you might be surprised, you might be equity rich, and you might have an opportunity to sell and cover off your obligations and be able to move on with some cash in hand and make a downsize for at least the next 2 to 3 years while the market sits in the state. For a lot of boomers, we serve a lot of boomers, as many of you know. We really specialize in helping seniors. For seniors who are watching this, you might be very equity rich in that you bought your home in the 60s, in the 50s, even in the 70s, and you've got a lot of equity, but you're feeling the pressure of either a HELOC. Some of you have taken home equity lines of credit to help your children buy their first property or to build a business of their own, but you're starting to feel the pressure there. The good news for you is, if you've got a lot of equity, you've got lots of options, and making a downsize means right now you'll be able to get a great deal on what you're buying, because there are a lot of sellers who have to sell. Just to tell you, this week and last week, we've seen a huge flood of inventory in all different neighborhoods and all different pockets. We're starting to see more homes hit the market and condos. And this is a culmination of landlords who just can't cover their nuts with the rent, no matter how high the market rent is right now. There are people who are forced to make that tough decision. Some people who own homes, they've already realized they've been trying to pace and keep at this pace for several months, but they're making the hard decision to pull the cord and rip on out of those houses. So if that's your situation, and you're looking for a plan, please confidentially reach out to us. You can respond to this email, and you can trust that the email is going to come to me directly, and then I'm going to be able to be in touch with you and help you. Unfortunately, we don't always have good news, and I hate to bring you this news in this beautiful summer weather while people are trying to really enjoy life, but the reality is, if you plan properly, you could be in a situation where that stomachache over the rates is over and done with before the year is through. But I will caution everybody watching this, it's not a market where homes can be put on the market and they're selling very quickly. The reality is we're in a very balanced market. We're seeing homes sit longer and longer in all sorts of neighborhoods, and you cannot afford to be priced too high or to test the market with February pricing. It's just not going to work. A lot of houses that come up without the right price or without the best condition, they are sitting, and at the end of the day, houses that sit for longer tend to get much less than if they priced properly to begin with. So I'm going to say to you, the most important thing is to get a view on what your house is worth, to make sure that you can present it in the best possible light, even given budget constraints, and talk to us about what that means, and really make a plan to get out before, I'm going to say, the ripple effects of this announcement are probably going to take 3 to 4 weeks to really be felt. So in 3 to 4 or 5 weeks, I'm going to say that we're probably going to see a decline. So June numbers, they looked pretty stable to May. We didn't see varying huge fluctuations or swings in one way or the other, but we are going to note more than a seasonal slowdown. We're expecting more than a seasonal slowdown with this new rate hike. So that means that things will naturally slow down in the month of August, and we have to expect that with the news of this interest rate hike. So I'm going to wrap this up and say we are still in summer. There are still wonderful things to look forward to, though I know some people are really struggling. If you need attention and you need confidential, private, actual service, or someone to sit down with you where you can brainstorm possible solutions because you want to get out of the financial pressure that you're sitting under, I'm going to tell you it's Jackie@othengroup.com. We're going to post it on the screen here. And you can also text me personally, 647-383-7653, if you really just need to talk about how to get out of this situation and get into a better situation. And if that means stepping out of the market temporarily, I know rental rates are high, but that might just be part of your temporary pain or a solution for at least the next couple of years until prices come down. There's no shame in stepping out of the real estate market. We almost always try to keep people invested in real estate because then you're staying in the market and your equity is still growing naturally. But I'm going to tell you, some of you just need to step out of the market right now, and that is okay. And if you need to make that tough decision, make sure that you partner with a professional team that can actually help you get your home on the market looking its very best with as little financial cost to you in preparing that home. So again, 647-383-7653. And as always, your inquiries to me are absolutely confidential. So if you need help, please do ask. And remember, the goal is to stay above the waterline. And if you're starting to slip, ask for help today.